Happy 4th of July weekend. This weekend, millions of Americans will gather with family and friends to celebrate our nation's independence. We'll watch fireworks, we'll fire up the grill, and reflect on the freedoms we often take for granted. But there's another kind of freedom, a freedom that doesn't get talked about nearly enough, and that's financial freedom. For many families, homeownership is one of the biggest steps towards building wealth and creating that freedom. And that's why this week's economic data matters. The economy added just 57,000 jobs in June, about half of what the economists were expecting. Yet home prices continue to rise. Buyers are still entering the market. So what's the story with the data telling us? Let's break it down. Let's start with employment. The Bureau of Labor Statistics reported that the US economy added 57,000 jobs in June. That's well below the expectation of 110,000. And to make matters more concerning, April and May payrolls were revised down by a combined 74,000 jobs. On the private sector, ADP estimated 98,000 new jobs, also coming in below expectations. And at first glance, that paints a picture of a slowing labor market. But here's where the story gets more interesting. The unemployment rate actually fell from 4.3 to 4.2%. And normally, that would sound like great news. But when you look beneath the headline, the picture changes. More than 720,000 people left the labor force, which helped push the unemployment rate lower, even though the household survey reported more than 500,000 job losses. That's why it's important to look beyond the headline numbers. Sometimes the headline tells one story and the data, it tells another. Now, this doesn't mean the labor market is collapsing. There were some encouraging signs this week. Job openings increased to 7.6 million, coming in above expectations. Initial unemployment claims remained relatively low. And Challenger, Gray, and Christmas reported that announced job cuts, they dropped 53% in June compared to May. However, AI-related restructuring, that remained the leading reason layoffs were so consistent for the fourth month in a row. So what does all this tell us? The labor market isn't falling apart. It's becoming more selective. Hiring has slowed, but demand for the workers hasn't disappeared. So let's shift to housing. Because despite the softer employment data, home prices continue moving higher. The latest Case-Shiller report showed national home prices increased 0.8% from March to April, following a 0.7% increase from the month before. The FHFA Home Price Index also reported another month of appreciation. Home prices financed with conventional loans, they increased 0.7% in April, after rising 1% in March and 0.9% in February. So that's 3 straight months of solid appreciation. And here's why that's important. Many people are still waiting for home prices to fall, but the data continues telling a different story. At the same time, mortgage purchase applications remained above where they were a year ago. That tells us buyers are still entering the market despite today's mortgage rates. Life doesn't stop because rates are higher. People get married, families grow, military members receive new orders, and people change jobs. And those life events, they continue regardless of where mortgage rates happen to be. One of the biggest misconceptions that I hear is that the Federal Reserve directly controls mortgage rates. That's simply not how it works. Mortgage rates, they're influenced by a combination of inflation expectations, bond market activity, labor market data, and broader economic conditions. And that's why reports like this week's job numbers matter so much. They're just one piece of a much larger puzzle. And while no one can predict exactly where rates will go next, understanding the data helps us make better decisions instead of reacting to headlines. So if there's one lesson from this week's report, it's this. The economy is showing signs of slowing, but the housing market continues to demonstrate resilience. Employment growth has cooled, yet home prices continue to appreciate. Hiring has slowed, yet buyers are still purchasing homes. Housing doesn't move based solely on headlines. It moves because real people continue to make real-life decisions, and that's why understanding the data matters. As we celebrate Independence Day this weekend, I hope you get the opportunity to spend time with the people who matter most. Because while we celebrate the freedom that makes this country so special, remember that financial freedom is built one decision at a time, one investment at a time, one mortgage payment at a time, and one home at a time. At Mercantini Home Loans, our goal isn't just to talk about mortgage rates. It's to help you understand the market, cut through the noise, and make informed decisions that move you closer to your financial goals. So whether you're buying your first home, refinancing, using the equity you've worked so hard to build, or simply trying to understand what's happening in today's economy, we're here to help. If you found this update valuable, I'd really appreciate it if you hit the like button and subscribe to the channel. It helps us reach more people who want honest mortgage education without the hype. And if you have a question about today's market, leave it in the comments below. I read every comment, and your questions often inspire future videos. At Mercantini Home Loans, we believe financial freedom starts with informed decisions. So stay informed, stay prepared, keep building your path towards financial freedom.